Hi everyone, it's Christy again from Alan Lewis Accountants, and today we're just going to look at some simple things you might want to consider for maximising your deductions for 2013. Now this is applicable to small business entity taxpayers. Traditionally, year-end tax planning for small business is based around some pretty simple concepts: accelerating your business deductions and deferring your income. Now, small business entities, or SBEs, have greater access to year-end tax planning due to particular concessions that really only apply to them. Now, the SBE system replaced the previous simplified tax system in July 2007. So taxpayers that qualify as an SBE can pretty much pick and choose which of the concessions they want to use each year. There are some restrictions though when it comes to simplified depreciation rules. So the basic requirement to be eligible for the SBE concessions is that the business's aggregated turnover is less than $2 million. Okay, so maximising deductions for small business taxpayers is going to involve accelerating expenditure and prepaying deductible business expenses. Now, I will just mention here accruing expenditure only because former STS taxpayers who've continued to use the STS cash method since before July 2005 cannot accrue their expenses, but some other SBE taxpayers on an accrual basis can. And what that means is as long as they've actually incurred the expense before June 30, they don't necessarily have to have paid it. I won't be covering accrual expenditure in this cast though, because I'll do that when we do our next one for non-SBE taxpayers. Now, it is never a good idea to purchase something solely for the purpose of a tax deduction. However, if you are in need of upgrading your vehicle, or you're looking at perhaps replacing the office computer system soon, you need some new tools, there's a piece of equipment you've been meaning to purchase, you're looking at doing that sometime in the future, you might want to consider actually purchasing and installing these items prior to 30th of June. And the reason for this now is that all SBE taxpayers can choose to write off depreciable assets costing less than $6,500, previously it was just $1,000, in the year of purchase. Also, assets costing less than $6,500 can be depreciated at 15% in the first year and 30% thereafter by popping them into a general pool. And cars have an even more favourable treatment. So if you're going to do this anyway, it might be something that you might want to consider doing before the end of the year. It should be noted though that if you're choosing to use the SBE depreciation rules, you're effectively locked in to using those rules for all of your depreciable assets. Eligible small businesses can also use the prepayments concession to claim a deduction for expenses they've prepaid, provided of course that the goods or services are received in full within 12 months of making that prepayment. Now obviously this will depend on your cash flow, but if you're in a position to be able to handle this can be a great way to bring forward your deductions. So the kinds of expenses that you may be able to prepay include things like rent on your business premises or equipment, lease payments on business items like cars or office furniture. You might be able to prepay interest on any loans, business trips, training courses, business subscriptions, office supplies, advertising. And look, if you've commit to making any tax deductible donations, make sure you do that before the 30th of June. If nothing else, it might be a good time to stock up on some consumables like stationery and postage stamps. If you're an employer and you like to give your staff bonuses at the end of each year, you might want to make sure that you write those bonus checks prior to the 30th of June. Also, although your super guarantee contribution for the June quarter isn't actually due until July, if you make sure that those funds are actually paid into the fund, the super fund, prior to June 30th, you'll actually receive a deduction for them in this financial year as opposed to next financial year. And doing that is going to help offset profits that you'll be paying tax on this year. Okay, so I do have just a few final thoughts and reminders here. First on government grants. So if your business has received a grant from a government department, it's most likely paid to you on the basis that it's taxable income, and therefore you need to disclose it in your tax return. So if you're lodging your tax return on a cash basis, ideally you want to ensure that the government grant funds have all been expended on tax deductible items prior to the 30th of June. If you've made a capital gain in the 2013 year, you certainly want to consider whether it's viable for you to look at matching capital losses with that capital gain. So capital losses are not directly deductible. They actually have to be offset against any capital gains generated during that financial year. So this is certainly worth considering. If you are predominantly self-employed and you're not receiving any employer super support anywhere else, an effective way to reduce your tax liability is to make a tax-deductible personal super contribution prior to the 30th of June 2013. Now, obviously, this is something that's very personal, so definitely talk to your accountant or advisor before you go ahead and do anything like that. As with last year, the ATO are ramping up their compliance activities when it comes to trust distributions. So trust distribution resolutions should be in place by the 30th of June. And of course, if you're making a distribution to a new beneficiary, then we're going to need their tax file number to report this to the tax office by the 28th of July. Now, there are some specific trading stock rules for small business entities. So small business entities don't have to account for changes in trading stock or prepare stock take for tax purposes, where the difference between the value of the opening stock and a reasonable estimate of the closing stock is $5,000 or less. And of course, the most obvious, but also most often neglected tip is to keep those records, paperwork records. Keep a hold of them. Now, it's really important to remember that June 30 falls on a Sunday this year. So if you're looking at making any prepayments or contributions, they need to be finalised by Friday, June the 28th in order to bring them into the 12/13 income tax return. And that's it for me again today. So this has been Christy from Allen Lewis Accountants. If you have any questions at all about any of these matters or anything else leading up to the end of the financial year, just leave them for us in the comments section and we'll get back to you just as soon as we can. Thank you.